Hey, welcome back to Your Money in Real Estate. I'm here with Mike Oswin. And as I figured, some of these numbers and some of these things you're kicking out is people are probably saying, what the heck? We've got a caller on the line. Rob, well, welcome to the show. What's your question there?
Hi, sorry?
Hi, Rob. Rob from Aurora?
Hi. Yeah, this is Rob. I was just wondering if your guest knows how long real estate values might continue to rise in Kirkland Lake.
The mines right now, the mines originally said 15 years for sure, and now they're saying 25 because they're hitting more gold as they go down. They're hitting the mother lode now, and they originally thought that they had already hit the mother lode.
Wow.
So the new technology is bringing out more gold than expected.
And so they're basing it on as it goes on,
Yes.
The reserves are getting bigger and bigger. It's
Yes.
not actually depleting.
That's right. That's right.
Well, but we talk about. Sorry, Rob. Was there another question you had there?
No, that's what I was wondering. That's pretty cool.
Yeah, you better maybe on the weekend take a drive up to Kirkland Lake and see if you can find a $20,000 unit.
Yeah, I just might do that.
Okay.
Thanks.
But thanks for the call, Rob. So he touched on something actually pretty important, which again is that risk factor. It's a one-horse town.
Yeah.
And if gold drops, what are you going to have? What if all your properties are up here? You've refinanced. I'm going to talk a little bit dangerous now, but you refinance. Some of them are worth 150. Gold drops, they're now worth 50, and you've got mortgages for 150.
Well, it's all about exit strategy. I mean, you've got to prepare ahead. I'm thinking 5 years, which is 2 more for me, but now I'm thinking it's going to be more like 10. If they're saying 15 to 25, prepare for 10. You want to hit while it's on top, not when it's coming down.
Yeah.
And it's not about gold value, I don't think, as much as it's about gold availability in the area. Like the mines are hitting a lot more gold than they expected. It's one of the top mine areas in the world now. It's starting to really creep in. I think people are going to be rushing up there for real estate pretty soon.
Technically, it's a gold rush.
Exactly.
Yeah.
Exactly, yeah.
But when you say an exit strategy, I mean, again, you're talking about like did you write a business plan? I mean, that's something that I always end up talking about.
Not as much as I have one in my head, and I did discuss it with both banks. So I do have a business plan, but the exit strategy is an important part of that, very important. You don't want to just invest your money and leave it. You have to watch the area, see what's happening, see what the influx of employment is. There's a lot of different things that can happen to an area.
Yeah. You're being somewhat humble about it, but it sounds like you're very on top of the fundamentals of what drives real estate. We got Chris from Markham on the line. Hi, Chris. Welcome to the show.
Hi.
What's your question there?
I was wondering, I want to get into sort of property investment, but I'm not sure. Is it a good idea for me to finance my current house for an initial investment?
Good question. I'll let the expert handle it. I got my own opinion, but what do you think there?
I think it's a great idea. I think it's the way a lot of people start. I was lucky enough to have a bit of seed money, but I also put my house into it too. So
well, but Chris, let me ask you though: do you have equity in your house? It sounds like you've looked into it, and you might be sitting on some equity, and you're sort of questioning. Is that what you're doing?
I do have a little bit of equity.
Are you intrigued by what's happening in Kirkland Lake right now?
Well, it sounds great. It sounds like it's already sort of being gobbled up, but certainly there are probably other areas in Ontario or close by which are sort of ripe for the taking.
Yeah. Yeah. Well, we talked with a couple weeks ago. We had a guest on from Aurelia, and we're certainly not seeing these prices. But even if things have peaked, if you're saying there's a 15-year window. That doesn't necessarily mean that that you say that it's even pushing it to 25.
Yeah.
Most real estate, I always say, is about at least a 5-year window.
Yes.
Going in at least for 5 years, being committed to that. But for a guy like Chris, though, I mean, would you say is a good time to buy in Kirkland Lake still?
It depends on the risk factor, on what he's comfortable with. If he's got money to blow and he wants to put into something risky, Kirkland Lake is definitely a good idea still. Don't forget, those prices aren't there right now.
Yeah.
That was 3 years ago. If you spent $1 million 3 years ago, it would be worth $5 now.
Yeah.
For sure.
Yeah. But we're still, we're still talking about $150,000 for a fourplex?
Yes.
Okay.
Yeah.
I mean, I know in Aurelia,
And the
350.
rents are the same as Aurelia.
Yeah. So you're and we're going to get into the cash flow sides later. I mean, besides the fact that appreciation has done what it's done, you must be seeing strong cash flow.
Oh yeah, the appreciation is the bonus. I needed cash flow when I got into it. My idea was to have cash flow, get away from the vending, get away from the hot dog cart and everything.
Sure.
As good as it was, I wanted to get away from it and do this full time, which I'm doing now. And I mean, the cash flow is great. It's fantastic.
But I mean, there's everyone has different strategies on buying. And obviously Chris there, he was saying, well, and you're saying, yep, use your equity, get into it. But like in terms of your strategy, you mentioned the word risk. Risk is a huge thing that every viewer out there, has a different tolerance for. And you talk like a financial advisor. They always say, well, risk tolerance, it's all about risk.
Yeah.
Would you say that Kirkland Lake is a risky investment right now?
Not right now. I mean, it depends what you define risk as.
Okay, you define risk.
I don't think it's risky because I'm still investing there. I set a 5-year window, and I'm coming up on that in about a year and a half, and I'm still more than willing to put everything in that basket.
Really?
Yeah.
Well, I mean, I can't wait to get to some of these numbers, but 150,000 at a fourplex at 7. I mean, the numbers.
They boggle your mind.
They do. I'm like, those are cash flows. Let me throw something at you because some of our guys are pretty aggressive out there. Are you looking for joint venture money? Are you looking for people to come to you and say, hey, Mike, I like you. I want to. If we were to invest, would you look at something like that?
I'd be open to that for sure. Since
the phones should start ringing. We've got a guy here with some serious cash flow, and he's saying, I'll take on partners. So any of you out there who've read the books, go to the RAIN groups, read Robert Kiyosaki. Now's the time. This guy is doing it. And obviously, have you done joint ventures before?
No, I haven't yet. But I'm open to it now because I've done a couple of private loans that are pretty high up in interest.
Okay.
And I'd rather get some joint venture money in there where I can actually be the guy to go up and knock on the doors.
Sure.
And do the footwork and use someone's money and give them a good return.
Yeah, because that's really what it's
Exactly.
going to be about. I know that there's a lot of people that come on the show and they've been taught that on smaller properties, I mean under $1 million, it's usually a 50-50. You got all the work, you're the expert.
Yeah.
Someone just says, hey, if we split a property and we split the cash flow, we split the appreciation, even the cash flow alone, we should be seeing 12-15% returns just on cash.
Exactly.
Mike, I got to ask you, what are you doing with all your money? I mean, are you taking trips? Are you?
Well, I took the first trip
that
I took the first trip for our family internationally last year. We went to Dominican Republic, all 8 of us, and had a great time. My brother got married there actually.
Oh, good for you.
And we had a fantastic holiday. First time most of my kids were on a plane, actually. Seriously.
Good for you.
Yeah. So it's working. Working.
I can see that. Well, let's get back to then some of, I guess, because I always like talking about your story and how you moved along. So you were able to refinance and you haven't, but how did you manage to, I mean, you go up there and I just told, if you're drive up to Kirkland Lake, I mean, finding a decent property manager, I know that's probably, from a day-to-day thing, that's your number one guy.
Yeah, definitely. I found a good property manager by having a bad one. Seriously.
So you found a good one because you know what a bad one is.
Yes, I had a bad one, and my real estate agent, who's helped me out a lot, recommended this guy to me. And it's just night and day difference. I mean, this guy looks after my properties. He runs the construction company, like I said, that does the repairs on the properties. The other guy just basically ripped me off.
Yeah.
And didn't do proper work,
Well, that's, again, we've had a caller or some people call in and say, everyone's always talking about how great real estate is. And, even outside, I said, it's okay to talk about the struggles because it's a fact of life. I mean, you're managing your whole portfolio. And we've had people on the show that say, you know what, we'll manage all your money. You make a nice 8-10% return. See, you're getting greater returns, but you're working really hard for your money.
Yeah.
And you hit the nail on the head. One bad manager, I mean, he could have been skimming money, saying he was getting. I mean, I know all the tricks. I mean, collecting rent and cash.
Yeah.
How do we know what's going on there?
That's right.
So how many times do you end up at the tribunal?
12.
That's it?
I think so. Yeah.
Boy, you're doing pretty good.
Well, there's different ways to ask tenants to leave.
Yeah.
You can do it with money. You can do it by shifting them to another apartment.
Okay.
You can do it with just reason. Like, you know, do you
Sure.
really want to live in these circumstances?
Yeah.
I say 12. It might be a little more than that.
Yeah.
But I don't go to the tribunal unless I know I'm going to win.
Have you had some nightmare stories?
Oh, yeah. Oh, definitely.
Let's hear one.
Well, the last place I bought, the fourplex, for $54,000, the average rent was $200, and they weren't paying them.
Yeah, of course.
And there were a couple of heroin addicts, and there were a couple of hoarders.
Oh.
It took about 3 or 4 months just to clean the place out and basically hose it down and get rid of smells. There were cats living between the first and second floor in the joists. 30 cats.
Get out.
30 feral cats, yeah. So we had to do all that and then start the refurbishing of all the units. You know, new floors and paint and new vanities and new toilets. And
So the one you bought for 54,
Yeah.
you put in. You said you put in 40.
yeah,
Plus, you had basically 4 months where you just were going crazy.
yeah. Actually, probably 5 months and no tenants during that time. So we lost money there, but now we're getting good rents. Now we're getting really good rents.
So you know it was 200. There was hoarders. What are the rents there now?
$700 for each of the 2 one-bedrooms.
Yeah.
And $850 for each of the 2 two-bedrooms.
Mike, I really gotta commend you. I mean, I got a few horror stories. But boy, that's why, and I'm laughing because I've been there. I mean, I should bring in some of my pictures of
Yeah.
some. I mean, this one. I mean, the roof was literally caving in, and people were still living in it.
Yeah,
That's the
that's
part
crazy.
that, you know, as I'm trying to think, why are these people here? Well, obviously they weren't paying rent.
Yeah.
You know, it's a free place to live.
Yeah.
But okay, so you got some horror stories, and you know you've been, as I say, you've been in the trenches, which is very very commendable. Tell me a little bit more about like your bigger properties then.
The biggest property I have is a 13-plex. It's 2 commercial and 11 residential,
So all of your stuff is residential?
except for those 2 commercial. Yeah.
Okay.
Yeah. That was my 3rd property, I think. Yeah, I bought that for $157, and then I refinanced it, like I said, for $298, and it's got to be worth $425, $450 now. We've upped the rents, and it's a beautiful building. Didn't have to do anything to it. Just turnkey, really nice apartments.
Why are people selling then?
They were selling a lot more a couple of years ago at the low prices, and now the people who are selling are the ones who are doubling their money, and they're trying to cash out. So,
Well, so, yeah, and I understand. You know, real estate's local, and you know, so it's cyclical. And so right now, people who live in Kirkland Lake, they knew that 3 or 4 years ago, 54,000 they bought in, and for them to double their money and go, oh my gosh, 100. But for us people here south of Barrie,
Yeah.
we look and go, oh my, even the refinance properties with
Yep.
those kind of rents are fantastic.
exactly.
So getting an influx of outsiders, and so I would have to agree with you that even people still coming in there, they're still going to find deals.
Oh, definitely. Yeah, the deals are still there. I mean, you just look at the cash flow and what the buildings are worth. Even when you give it a low cap rate, it's still, or a high cap rate, it's still going to be worth a lot more than what you would find down here, you know, or
Yeah.
in Aurelia or Barrie.
Well, I hate to dwell on, or I hate to certainly emphasize that you make your money through appreciation, because we're gonna get into the cash flow. We're gonna bring out the board, my favorite part of the show, and we're gonna get into some numbers. We're gonna take a quick break, and we'll be right back on Your Money in Real Estate.